What actually determines the value of a dental practice?
When a buyer dentist or a third party is looking at your dental practice, what they're trying to figure out is what are the profits? That's their question number one.
Why are financial statements so central to valuation?
That's where everything starts. Financial statements is where everything starts for doing the evaluation of a dental practice. Benchmarking is a great tool. It gives you an idea what percentage of collections are you supposed to be spending on certain categories.
Is the buyer actually buying the dentist or the business that they're running?
Most of the time, they're buying the business, and that is their goal. When you are selling the dental practice, your skills matter, your production matters, all of that stuff matters.
DJ, welcome back to another podcast.
Thank you.
How are you?
Good. How are you doing?
All good, all good. So, in our previous podcasts, we had discussed and learned about bookkeeping for dentists and taxes. I guess I know something about it now, and I can ask you better questions now. So, in today's podcast, we'll be discussing how a dentist can increase the value of their dental practice.
I think that's a good progression of a business owner. And first thing is you basically start a business and then you build it. And then if you've been in the business for a few years, you're like, okay, I built this thing. How much is it really worth? And if it is worth X dollars, how do I increase the value of my dental practice? So it's a good progression, and it's a good thing to know. Um, what is my biggest asset typically? What is it worth?
So, let's understand this first. When a dentist think about increasing the value, what do they actually focus on?
A lot of dentists, when they are thinking about valuing the practice, I think they're thinking about production. They're thinking about their own skill set. What can we do in the practice to increase production? They also think about expanding their services. So that's what they think about, I believe. But what really matters is what are the profits of the practice? What is the cash flow? That's what you get the valuation of the practice on. Production is great, but if you don't collect that money, it's not really increasing the value of the practice. So the thing is, clinical excellence builds reputation, but profits are what build the value of the practice. So that's what you have to start focusing on is what are the profits of my dental practice?
So, as you have mentioned about the profits, what actually determines the value of a dental practice?
So when a buyer dentist or a third party is looking at your dental practice, what they're trying to figure out is, okay, what are the profits? That's their question number one.
Right.
Okay, what are the profits? Then they want to look at, okay, top line revenue, how much is this dental practice actually collecting? Where are they spending their money? Are they spending on payroll? How much are they spending on lab supplies? How much are they spending on dental supplies? So all that stuff matters. And based on that, they come up with, okay, what are they really making from a profit standpoint? And after we buy the practice, first of all, we need to get this financed. How much are we going to have to pay to a bank to buy the practice? So they're looking at multiple things, but profits and collections, they're all part of the thing. And what is the expense mix? And, is there anything the buyer can do to increase the value of the practice, increase the cash flow of the practice after they buy the practice? So there's a lot of things that they're looking at, but they do start with profits and collections and where are the expenses of the dental practice.
Okay.
So the next thing they're looking at is, are your margins consistent year over year? Are they growing?
Okay.
Are they remaining flat? Are they going down? If you have a practice where the margins are being squeezed and your profitability is going down, that means the value of your practice is going down. If you slow down, some dentists who are getting up in their age, what happens is they kind of mentally slow down and they stop producing as much as they used to. And then what happens is the value of the practice is going down. So they think about it this way. Nobody wants to buy a practice that's going this direction.
Right.
Everybody wants to buy something that's going up. There are people who are looking for opportunities to buy practices that are going down. But the thing is, they're not going to pay you as the seller of the practice top dollars.
Okay.
So that's the other thing. You need to make sure your profits are going up not down. The other thing they're looking at is overhead control. Are you controlling your expenses? We understand that expenses are increasing due to inflation and other cost factors, but you as a business owner need to start looking at, okay, if the costs are going up, I got to figure out how to make my revenue go up too. You can't just have, costs going up and revenue staying the same. That means your profits are going down. Your profits are going down, that means your value of the practice is going down. So you have to think about that as well. So the other thing they're looking at, what are the risks that are related to this purchase? They're going to look at how are you operating the practice? Are you following the norms that do happen in a dental practice? Or are you doing something that is really, really outside of the box? They evaluate those things and figure out, okay, hey, is this a risk that we want to take or not? And if it's too much of a hassle, they're probably not going to go for it, or they're going to not give you the valuation that you're looking for. So one of the things you have to look at is, okay, hey, am I doing the things that a normal other dentist would do? So when a patient comes in, it's an insurance patient, you have to collect copays. Okay, if you're not collecting those copays, the next guy might be like, do I really want to buy this practice? Because sometimes that could be considered insurance fraud. And the buyer dentist won't take that risk. So you have to be really careful. So those types of things that you have to minimize from a risk standpoint for the purchaser as well.
So, when we talk about the buyer, is the buyer actually buying the dentist or the business that they're running?
Most of the time, you're buying the business. Unless the dentist is going to stay and work for you for a couple of years, which is very seldom. Um, most of the time, they're buying the business, and that is their goal. And even if you stay there for a little bit, the goal is that you're going to phase out, and the new doctor is going to take over, maybe an associate. And if it's a buying doctor who's going to practice in that, then you're not even going to stay there for a very long time. You're just going to transition the patients, and sometimes it's just a letter that you send to the patients, and you as the seller move on, and the buyer takes over. So that's what happens when you are trying to sell the practice and somebody's trying to buy it. You have to keep in mind that when you are selling the dental practice, okay, your skills matter, the mix of procedures that you do matter, um, your production matters, all of that stuff matters. However, what really matters to the buyer is, okay, hey, it's not production, it's collections. What are they collecting? What really matters is, okay, how are they spending that money? Can I clearly see on their financial statements how they're spending their money? They're more concerned about the business picture and the financial statements than your very specific production reports. Most of the people who are buying the dental practice are dentists themselves. They can look at that fairly quickly and be like, okay, this seems reasonable. And most smart dentists are not going to buy out a dentist who does a lot of procedures that they don't do. Because all of a sudden, if you were doing a procedure that was 20% of the collections, then that 20% is gone because they're not the one going to be doing it, or they have to pay somebody else to do that. So it's as soon as they buy it, then that 20% of collections is gone. So most smart dentists are probably not going to do that, or they will have a plan how to keep that production in-house by paying somebody else. Okay, what they're looking for is, hey, how do your financial statements look like? Can I make sense out of these? Can I clearly see what is payroll costs? What are lab costs? What are your dental supplies costs? How much are you paying in rent and those kinds of things? And then, are those normal? If you are trying to sell a dental practice and those are not normal, either they're too high or too low, there are going to be more and more questions from the buyer, or at least they should ask those. If somebody's not on their side and they're not asking those, that's on them. But most smart dentists, most smart business owners will ask those questions. So you need to really have a clean set of financial statements to be able to present to the buyer, initially the broker, that, okay, hey, here's our financial statements. And then, they will build the valuation based on that. What really happens is, if you have a messy set of books, or things are not crystal clear and easy to understand, the broker starts to ask you a bunch of questions. And they're like, you tell us, what does this mean, or what is this miscellaneous category? There is no miscellaneous category on a chart of accounts, let me tell you that. But they start to ask you more questions, and what happens is they will fix those things on their side, and then a good buyer will sometimes ask you the same questions because their due diligence person is saying, what is this supposed to be? And they also look at the tax return, and figure out, okay, do these financial statements match the tax return?
Right.
And if they don't, or there's, miscellaneous is distributed in 5 other categories, they're going to ask more and more questions. So it becomes a big of a hassle to come up with this. And the more hassle you have during the buying process, the more questions the buyer asks. What really it leads to is them thinking there's more risk involved. The more risk you have, the lesser valuation you get for your practice, um, lesser offers you get, and there are also delayed offers because it takes them long to figure out, is this worth buying or not. So you have to have clear financial statements when you're trying to sell your practice.
Okay, so apart from the financial statements, do you think that reputation among the patients can be a good factor that a new buyer must be considering uh, about the value of the dental practice?
That certainly matters. Google reviews matter. How are people reviewing you on ZocDoc or Facebook? Those things matter. But what happens is, if it's very specific to you as the doctor, sometimes those go with you. If you have good reviews, we tell our clients to make sure get access to those Google profiles, because you have good reputation, or the seller has good reputation. We tell the buyer to make sure to get those accounts transferred. But that creates a little bit of effect from a cash flow standpoint. But the financial statements is where they're really looking at, okay, hey, are these numbers real?
So, why are financial statements so central to valuation?
That's where everything starts. Financial statements is where everything starts for doing the evaluation of a dental practice. The list you get from the broker or certified evaluator is, hey, send us financial statements for the last 3 years, send us tax returns for the last 3 years, send us a bunch of management reports, and so on and so forth. And granted, there are a lot of reports coming from the dental practice management system, but that's to understand and help the buyer understand what is the mix of the patients, how many active patients you have, and so on and so forth. Those do count. But if you notice, the evaluation is done based on the past 3 years of financial statements. They're not taking those active numbers and giving, okay, if you have 1,500 active patients, the value is $200 per patient. That's why this is the value practice. That's not how that works. They're looking at the previous 3 years of financial statements. And those financial statements you provide to the broker, they need to match the tax return. You can't have, your tax return saying that the profits of the dental practice were $200,000 for a specific year, and the P&L is saying it was $300,000. Anybody who's doing due diligence is going to question that and then question it again. So you have to be careful. What are you really saying? And you have to provide the financial statements that actually represent or are close to the tax return itself.
Okay, so there might be dental practices that looks highly profitable from outside but are actually broke inside, right?
Yeah. So that's why you go through the process of due diligence. You look at the financial statements, you ask questions, and brokers love to make adjustments to make your dental practice look more profitable and hence value it more. And that's what they're supposed to do. That is their job. Their job as the broker on your side is to get you the best dollars, the top dollars they can get for you. That is their job. It is the job of the buyer to make sure they're buying the dental practice at the right price and they're buying the right dental practice for themselves. That's the buyer's job. However, if you make the job easier by providing the right reports from your management software, right financial statements that make sense and are in good format, which gives them information on a with the first glance. It just makes the life of the buyer easier, makes the life of the broker easier. So it helps to have the right kind of financial statements in the right formats.
So, in a previous answer, you have mentioned about the messy books. How does messy books reduce the valuation of your dental practice?
When you have messy books, what happens is nothing is clear to the buyer. They have to work with this, with the financial statements, with the messy books to get it kind of cleaned up and really understand. And what happens is some buyers like, I just don't want to deal with it. So what happens is you get less offers on your dental practice.
Okay.
Okay. So the lesser number of offers you get, that means, hey, there's no competition. Whatever comes in the door, you may have to just take that and move on. You don't want that for your dental practice. You want it to be where, hey, buyer one or potential buyer one looks at your financial statements. They can clearly see what your collections were. They can clearly see, hey, how much you spent on your employees, what was the percentage, how much you spent on your dental supplies, how much did you spend on your lab costs, how much was rent and facilities expenses. They can see those clearly. If you've clearly on those financial statements shown the percentage of expenses related to the collections themselves, and what happens is they can clearly see, okay, what are they really spending? Okay. And if it's a smart buyer, they probably would have done some research and they already know, okay, hey, typical employee expenses should be around 31%. Okay. If they look at that and it shows 31%, they're like, or lower than that, they know, okay, they're on the right track. But if it shows 40%, then what happens is they know, okay, hey, there's some improvement that needs to be done, and I, as the buyer, need to be aware of it. What it also does is that if it is at 40%, okay, if you have messy books, you don't see that. If you don't see that, you don't put in the effort to bring it down to 31% or lower than 31%.
Okay.
That means you're losing profit when you own the practice. While you are owning that practice, you're losing profits that you should be earning. Okay. So that's while you're going, but also, hey, if you have more profits, that means the value of your practice is more. So if you don't keep an eye on that, you're not fixing your ongoing profitability. Hence, if you're not fixing your ongoing profitability, that means when you are getting the value of the practice, the value is based on lower profits. Hence, the value of the dental practice is lower.
Okay. So, if somebody gets the books cleaned right before selling their practice, can it increase their value?
I wish. That would have been nice. To be like, okay, hey, I want to sell my practice tomorrow. I'm gonna get my books
Let's
clean. I'm
let's do
gonna
it today.
let's get this done. Unfortunately, that's not how it works out. Every time you're selling a dental practice, they're not looking for just 1 year. That's not how it happens. They're looking for past 3 years.
Okay.
Okay, so now you can go back and clean the books for past 3 years, but if somebody's doing due diligence from the buyer side, they want those numbers to match the tax returns.
Hmm.
Okay, so you already filed your tax return for the past 2 years at least,
Right.
and then those numbers not going to match the tax return. Now it's a problem
Okay.
because the buyer's due diligence guy or gal is saying these things don't even match. So we can't trust those numbers. If they can't trust those numbers, that means there's more risk. More risk means lower value for your dental practice. So, as I said, it would be nice that, okay, hey, today I want to sell my practice. I just go ahead and get them clean and I'm good to go. Unfortunately, that's not how it works. You have to keep clean sets of books so that when you are ready to sell, you have clean sets of books which tie to the tax return, and the broker can use those things to figure out, okay, what is the value of this practice, and it is not creating additional risks for the buyer either.
Okay. And talking about the margins, that can increasing margins increase the value of your dental practice?
Yeah, if you increase your profit margin, it automatically increases the value of the dental practice. What we are looking to do is increase the EBITDA. As the seller of the dental practice, what you're trying to do is increase the EBITDA, earnings before taxes, interest, depreciation, and amortization. Okay, there should be a line on your P&Ls or statement of income and expenses showing you exactly what the EBITDA is. It may not exactly say EBITDA, but your accountant should be able to tell you on your financial statement, hey, this is your EBITDA line, okay? If you go anywhere and somebody asks you what's your EBITDA, this is the number you have, okay? And just by looking at your financial statements, if the practices in your area are going for 2 times EBITDA, 2.5 times EBITDA, or 3 times EBITDA, you can just mentally know, okay, this is my EBITDA. My EBITDA is, let's say, $300,000. And in my area, dental practices are going for 2.5 times EBITDA. Now you already know my practice is worth $750,000. See what I'm saying? So it should be visible fairly easily for you. Now, if you have messy books, as I was mentioning earlier, you're not going to see that. If your financial statements are not formatted for a dentist, for a dental practice, you are not going to see that. And then you're kind of sort of in the dark. I'm not saying that brokers are not going to make changes to make that look better. I'm not saying that. What I'm saying is that, hey, you don't have to just go to a broker to do this. At least now, when you're just running your practice, you kind of sort of mentally have an idea that, okay, I have this big asset. Okay, it is worth this much money, probably, or somewhere in that range, and it brings clarity. Okay, some dentists think, hey, I have this nice asset, it's going to give me a lot of money, or it's going to help me retire. Yes, that is part of what it's going to do, but the thing is, sometimes the expectations are not right. Some under expect. They feel like, hey, my practice might be only worth $200,000. I have clients who've told me that, hey, I have this practice, it doesn't look very good, and other reasons, so I don't think it's worth anywhere close to what, $700,000, anything like that. But we see other sales, we see what practices are going for, and then I'm like, no, it's more than that. You might be, if somebody's just offering you $300,000 for $700,000 practice, I'm like, no, you need to think about this and talk to somebody who can actually look at this and be like, okay, no, it's not $300,000. It is worth $700,000. Let's look at it the correct way.
Okay.
But then there's the other side. There's the flip side. Somebody might just have a $300,000 practice and they think it's worth $1.2 million.
Right.
It's not. Again, you have to look at those numbers and, be like, okay, what is it really worth? So what happens is, when you have the right set of books, okay, when you see those numbers clearly, when you kind of sort of have an idea, what is the EBITDA most of the dental practices are going in my area, you get a better idea. What is my asset? Typically, the biggest asset you have, what is that thing worth? Is it worth, sometimes $300,000? Is it worth $700,000? Is it worth over $1 million? What is it? So you at least have some sort of idea, and that helps, brings clarity to your life.
So we have discussed about various factors now, but what do you think, which areas typically impact the maximum on the value of the practice?
Well, I think there's this one area, profits. Are you making money? It's as simple as that. If you're making money and if you are at the right location, then, that's the main thing.
Okay.
The number one thing is, are you making money? How much money are you making? Okay. There are subsections and, things you can do to increase that. Okay. Keep an eye on how much are you spending on payroll? How much are you spending on dental supplies? How much are you spending on lab costs? Okay. And then figure out, if you are, let's say, the average dental practice EBITDA is around 35%. Okay. That's the average. Okay. If you can bring that to 40%, your EBITDA goes up by 5%. Okay. 5% of $1 million is $50,000. Okay. If you're getting EBITDA of 2 times, okay, that means by just increasing your profits by 5%, $50,000, the value of your practice went up by $100,000. That's a big chunk of change in my mind.
Right.
$100,000 is a decent chunk of change. The other part is, you want to increase profits of your dental practice, not just for sale. You want to increase the profits of your dental practice just so that you make more money while you're operating the dental practice. And that's what the buyers are looking for. They want you to have good profits. If you're having good profits, they expect they will have good profits. Okay. And then if they feel like they are going to have good profits, they're going to pay more for the dental practice. Okay. So that's what you have to look at. Okay. What am I spending my money on? And how can I increase the profits of my practice? Okay.
And how does operational independence and building systems increase the value of your dental practice?
So if you have a dental practice that is independent of you, you're not the major or majority producer at the dental practice, you're not there every day, you are not supervising people every day, then what happens is it is an independent dental practice.
It's autopilot.
Exactly. What happens is in that case, that dental practice, anybody can buy. It can be, it still has to be a dentist to legally own the dental practice, but any other dentist can buy or any other group can buy and be like, okay, we're not going to change anything. Now, I am not having to spend my energy to do much on this dental practice. All I have to do is spend $500,000 to buy the dental practice, and it still keeps generating $200,000 in revenue. Okay, so independence makes the value of the practice higher because all I am, the buyer, investing is money, not a whole lot of additional time, just money. And if I put that money in bank, what am I going to get? 3.5%, not a whole lot of return on investment.
Right.
But if I buy this asset, if I put in 200, let's say, if I put in $500,000, I'm getting, let's say, even $100,000 worth of profit. That's 20% of my investment coming in every year. Okay. So independence really matters. You have to figure out that, okay, hey, I am a dentist. How am I going to make myself obsolete for this dental practice? Okay. You have to figure that out. Typically, that only happens when you are owning multiple dental practice. If you are the sole owner, typically what happens is you're the main producer of the practice and you have the profit coming in, and that's a higher EBITDA. Okay, from a single practice owner purchaser, it's a higher EBITDA, and the person who's buying it as the person who's thinking I'm going to practice instead of this dentist, they're going to look at, okay, what is the EBITDA without paying the owner dentist. Now, if DSO is buying it, they're going to look at, okay, hey, we are going to replace this dentist, whoever the owner dentist was, and we're going to replace that dentist's wages by what we think is the market rate for an associate dentist to produce similar amount of dentistry. So it's just a different situation. But independence, if your dental practices or your dental practice is independent of you, other than maybe some guidance and management, then it brings in more value, and you have more people who can buy the dental practice because they don't have to go in. They can invest and manage it a little bit, and then the practice takes care of itself. So it's a much more valuable practice because I don't have to spend my time in managing this thing.
Right. So, coming back to the financial management, does monthly financial discipline affects the long-term equity?
It does. I mean, the value of the practice is not built in one day or 1 month. You have to be consistent. You have to have consistent financial results. Okay. And how do you manage those? How do you, calculate those? How do you figure out what was my profit month over month? You have to have a set of financial statements. And when you see a set of financial statements, formatted the right way, where it tells you what your payroll expenses are, tells you what your lab and dental supplies are. Those are the things that you can control. Then if it's going out of hand, or the average is 31% and you are, at 40%, how can you bring it down? Or in the past, you have been at 27%. Now yours is creeping up to the average of 31%. Hey, how can I bring it back to 7%? Because you are more profitable. That means the value of the practice is more. Okay. So what monthly financial statement does is it keeps you in the loop of where's your practice and how can you improve it. And what improved financial statements, what improved profitability means is more valuation for your dental practice. If you don't pay attention to that, and then you're surprised by my practice is not worth as much as I thought, then it shouldn't be a surprise because you never paid attention. You have to pay attention.
Okay. Now, talking about the multi-location owners, the dentists who practice on multi-locations, how can they improve their value?
So it's not very different from single owner practices. What's different is when you have multiple locations, whoever is buying that practice or those practices are going to look at them together. Okay. If they're buying them all together. And if you're just selling one of your 5 dental practices or 10 dental practices, as a due diligence person myself, I'm looking at that with a little bit more skepticism because I'm like, okay, hey, are these financial statements truly reflective of this location, or maybe some of the expenses were paid from other dental practices and this one's looking better than what it should.
Okay.
You see what I'm saying? So that's the single practice scenario. Okay. When you are selling all the dental practice, let's say you have a group of 5 and you're selling all of them together, the buyer is going to want to know which of these practices are doing well and which ones are not. Okay. They generally want all of them to be doing great. So if practice 1 is doing great, practice 2 is doing great, practice 3 is not doing so well, that drops the value of group a little bit. Okay. So you have to be careful. Okay. How's it looking? Now, how do you even know that which one is doing good or bad? You have to have separate set of books. We have clients who come in and they will have multiple dental practices, and sometimes, or most of the time, they ask us, do you want to just keep one set of books for both the dental practices or multiple practices, or do you want to keep them separate? We're always like, you need to keep them separate.
Okay.
Because what happens is, how do you know practice A is subsidizing practice B?
Right.
Okay. If you just have one collection number, it's really hard to say, okay, 1 or 2. You can go back to your management system and figure that out, but it's not on the financial statements. It's really hard to tell. Then you have payroll. It's just one lumped up payroll. It's really hard to be like, okay, how do we divvy this up between the 2 locations? It's a lot of work to divvy that up if you're trying to do it after the fact.
Right.
Keep separate sets of books for each dental practice that you have. Even if you have 20, each of them needs to have their own set of financial statements.
Okay.
The other thing is, if each of those locations have their own tax return, you're going to have to separate them out anyways. Okay. So why not do it the right way and then keep them separate from the get-go? The other thing is, if you keep them separate, now you can get a clearer picture that, okay, hey, we have location A doing $1.5 million. We're spending about 28% on payroll over here. We're spending 4% on dental supplies. And that is lower than the average, but that's what you're spending because you are keeping it separate and you're keeping good records. You have separate bank accounts, separate credit card accounts, so you can tell, hey, anything going on this credit card is for this dental practice, and that's how we're, coding them. So now you can tell which one is making money. Okay, so that's what location A is doing. Now you go to location B, and you're seeing that it only collected $800,000. Okay, it has 40% in payroll. Now you got to think about, what am I doing in practice A? What can I take from practice A to put in practice B from a system standpoint?
Right.
And make that $800,000 go up and bring the payroll in line. Those are things you can do if you keep separate set of books. The other thing, what you need to do is every month you need to get a set of combined profit and loss statement from your accountant, which tells you location A, what are the income and expenses for location A? What are the percentages for that income and expenses for location A? Location B, what is the income for location B? What are the expenses? What are the percentages? And so on and so forth. If you have 10 practices, you need that in 20 different columns, 10 for the amounts and 10 for the percentages. And then you need to have a total column. Okay, in total, the group has $15 million in collections. I'm spending about, in total, 25% on payroll and so on and so forth. This way, okay, which practices are doing good, which practices are not doing so good, and what is my total looking like. If you don't see that, and you can't look at those practices together, it is very hard. And it's a painful process to get them together. And if you're not getting that one report, it's very hard to figure out, okay, which practice is doing good, which practice is not doing good. How do you compare the practice, and so on and so forth. We have clients who have 5 dental practices, 10 dental practices, and so forth. What I have noticed is the practice owners who have multiple dental practices, we provide this report to them, which shows exactly what I'm talking about. That's the only report they download. They do not download the monthly financial statement for the other stuff. They just don't do that. This one report they download every month, and they're looking at it every month so that they can get a better understanding. Okay, for each location, they can get better understanding of which one do I really need to focus on. So going back to the valuation part of it, okay, when you see those reports every month, again, just like single practice, even multiple practices, at the end of the day, profit is king. Cash flow is king. If you are looking at your locations and you're figuring out practice B is not doing so good, then you start to focus on that. You start to increase the profits of that practice. If practice B starts to do good and practice E has some issues, you start to fix those things. And you do them simultaneously and figure those things out. Then what happens is overall, the profits of the whole group are better. And now, at the end of the day, it's EBITDA multiplied by, what is your multiple? Okay, my practices are worth, 2 times my EBITDA or 3 times my EBITDA. Profits go up, the value goes up, your payout is more. So that's how keeping, proper sets of books and having proper reports makes the value of your whole group much better compared to not having an idea like what the right numbers might be.
And how does benchmarking increase the practice value?
What benchmarking does is it gives you an idea what percentage of collection are you supposed to be spending on certain categories. What it allows you to do is figure out where you are supposed to be spending your time and effort to make your dental practice more profitable. Okay. What you have to keep in mind is, yes, there's a lot of benchmarking numbers online. It's not hard to find those. But the thing is, how does the benchmarking numbers online compare to how your bookkeeper or your accountant is categorizing stuff? Okay, you have to think about that too. You have to make sure things are done in an apples to apples manner. Okay, when you're comparing things, you have to make sure you're comparing apples to apples. So keep that in mind. Okay, benchmarking is a great tool to increase profitability. It tells you what direction you're supposed to go, where you're lacking, and then you need to figure out, okay, hey, this is how I fix things.
And if someone isn't planning to sell their practice soon, why should they focus on the value now?
It's not just about the value of the dental practice. It's not just about that. When you own the practice, you want to maximize your profits.
Right.
Okay. Maximizing profits leads to higher value. Okay. So it's not just about, the valuation part. It's about profits and what do we want to get out of it later on. Okay. So also keep in mind that even if you're not wanting to sell your practice right now, things change. I work with a lot of doctors who are not anywhere close to their retirement. Okay. But something changes. Okay. Something changes in their personal life. Somebody gets sick. All of a sudden their spouse wants to move or they want to move. Things change. And all of a sudden you need to sell this practice. If you don't have the proper records, if you don't have the proper reports, or you need to go back and fix 3 years, it's not possible.
Right.
Okay. So things change. So you need to keep proper records so that if something changes, you can get a proper valuation for your dental practice. You can value the dental practice at the highest amount possible. And if nothing else, those reports are helping you increase profitability, keep you aware of, where you should focus or where you should pay more attention so that you can increase the profitability.
Okay. And What's that one habit that you have seen that increases the practice's value more than anything else?
I think consistency.
Okay.
Consistency is what increases the value of a dental practice. Okay. Consistency in the level of revenue or the growth of the revenue, consistency in, okay, what percentage are you paying your staff, what percentage are you spending on dental supplies, and trying to improve that. Okay. If you have a good set of financial statements and consistently have those, if all of a sudden you have to sell your dental practice, or if you plan to sell your dental practice, then what happens is the easier you make it for the buyer, the bigger value you're going to get for your dental practice. So what happens is consistency in focusing on the dental practice, consistency in keeping an eye on the profit and keeping the EBITDA up so that you're making more money, and hence the profits are more, hence the value of the practice is more.
So, what do you think? What's the biggest mindset shift that dentists need about value?
I think you need to start thinking about cash flow. You need to start thinking about profits, and you need to start thinking about, okay, how can I increase the value of this thing? Okay. Um, your skills matter because that's what built this practice.
Right.
What you do in your dental practice from a production standpoint, procedure standpoint, all of those things matter when it comes to production and what you're collecting. But you also have to keep in mind that, okay, after collections, where's that money going? Okay. And how do I optimize and control my expenses so that I increase the profits of my dental practice? And those are the things you need to start focusing on and shifting when you're trying to sell your dental practice. You need to have clean reports which reflect, the tax return, or the tax return reflects those reports, so that when you're going through due diligence, the person who's doing it is going to go back and look at the tax return and make sure those match the financial statements. If they don't, they're going to ask more and more questions. So if you are planning on selling in 3 years, then you do need to start planning early that, okay, hey, I am going to sell this thing in 3 years. I need to make sure I get things right. I get things in the right bucket, reporting the financial statements on the tax return and so on and so forth. So you have to plan early. And as I said, life happens, and people want to move, people get sick, and sometimes you just have to sell it. But if you have the right reports, the transaction is easier. The buyer thinks it's a lesser of a risk to buy the dental practice, and hence the value of your practice is more, and you get paid more for your dental practice.
Okay. So, thank you so much, DJ. It was a wonderful and a very insightful conversation. I hope our audience understands how they can increase the value of their dental practice. Once again, thank you so much for coming.
Thank you. I hope this was helpful.